Hello all, good to see you again. It's been a while. This is a series of videos we are launching under BMP for expats, particularly in Hong Kong and in the Asia jurisdiction, but obviously it can be used for anyone in any other jurisdiction as well on most of these things. Today we're looking at Americans as expats in Hong Kong in particular. Hong Kong's favorable at the moment with the years of Trump and the trade war, and now what's going on with the China policies in Hong Kong, how it's evolving. So it'll be very interesting to see some insights there from our guest. And for those who don't know BMP, we are a wealth management firm based in Hong Kong with reach going back into Europe, UK in particular as well, as clients move around to different jurisdictions. And we focus on what's called enough. So making sure clients have enough money for the rest of their lives and in the lifestyle of choice. So you get people too much money, too little, or just the right amount, and then we come in on the back of that to give the appropriate advice. Now, of course, for expats, we all got different nationalities with different taxes, different jurisdictional issues. So my guest today is a long-term expat, a guy called Steve. He's a friend of mine as well. I've known him for a long time, and he's based in Hong Kong. So welcome, Steve.
Thank you, Howard. Yes, I am an American, born in the state of Ohio. I have a daughter now lives in California, a son who studies in England, but I'm a long-term Hong Kong expat, having been here for 38 years and maintained my U.S. citizenship the entire time, and I intend to.
That's very good. So look, tell us about what you've been doing in Hong Kong for that length of time. That's an awful long time, one of the longest serving expats I come across. I thought I was long term at 23, nearly 24 years. But so what have you been up to? What's kept you out here?
Well, I guess it's the business environment. I did arrive as a financial journalist, and after about 10 years in that profession, I knew I was done and wanted to move to the business side. So I did sales and marketing with Reuters, with Dow Jones Telerate, a couple of firms that were very, very central to the banks and brokers and fund houses in Hong Kong and around the world. And definitely it was a global, outlook that we developed from Hong Kong as very much a global and regional financial center.
Well, that's fantastic. So you've been very close to the financial market, so to speak, for an awful long time, which gives you a really good insight with what's going on and the changes for Americans, which we'll touch on a little bit later. But I think a lot of the viewers would be very interested also to hear about Hong Kong itself. So, you've been in Hong Kong for all that time, I believe. So what's kept you in Hong Kong in particular? And as an American, how are you finding the recent changes in Hong Kong?
Well, sometimes you gulp a little bit at all of the changes, whether it be from civil unrest, pandemics, or national security concerns. There's always a little effort to make it go down without too much pain. But we're fine, hoping to remain and see Hong Kong normalize. I think it will. I do think that Hong Kong has many opportunities ahead of it in terms of business in the Greater Bay Area, in the Southeast Asian area. It's not going to change that dramatically. The only concern I have is maybe for the young people. Their outlook has changed. Not sure my children will work in Hong Kong. They may, take their careers abroad. And I'm sure maybe others feel the same way. And it's because they wish to avoid any difficulties in Hong Kong. Yes,
I think you're right along there. I think at a high level politically, it's a lot of changes, but day-to-day life, not a great lot of change. And I think Hong Kong will get its tracks back and will start moving forward as history has done many times before. So I agree with you on those fronts. Interesting insights, though, Steve, as an American, because the years of Trump and now the current Biden administration, an American will have a different perspective, I assume.
I assume that, yes, we have to follow our own government very closely in terms of their policy. I agree with you. We haven't seen any dramatic change from the Trump administration to the Biden administration in terms of China policy, but it will play out over time. Nothing stays the same.
Absolutely. What's it? Death, taxes, and change. Those are the certainties of life. So getting back to it then, from a financial perspective with your history in Hong Kong, of course, the big thing that happened going back 2012 was something called FATCA. And that was on the back of the US taxing its citizens based on citizenship. So no matter where you are in the world, you're exposed to US taxes. Very, very much unlike most other countries, which is based on the geography where you're in, either source of money or your residency. So FATCA, which is an interesting new law that came in, and I believe I get it right with its definitions, it's called Foreign Account Tax Compliance Act, which came into force to try and obviously ensure that the Americans start paying their due taxes from all over the world. So do you remember how those changes coming in, and how did they affect you?
In terms of personal income tax, yes, there were changes that affected me. By that time, I'd lived in Hong Kong for 30 years, lots of experience sending in tax returns, but tax returns became harder at that point. For instance, for foreign financial accounts, one has to tell the IRS and the Treasury Department what was the maximum amount in your account during the tax year. And it used to be pretty easy. You could tick if it was under 10,000 or under 100,000 or over that amount. But then suddenly you have to tell them the highest amount at any nanosecond during the year. And that became much harder and much more intensive in terms of your data discovery in your own accounts. And hopefully your financial institutions wouldn't make any mistakes when they do some reporting on that too. FATCA affected financial institutions as much as it affected the individuals involved in terms of reporting, and the obligation to remain in the good graces of the U.S. tax authorities is on everybody now, so it would seem. And the taxpayer just has to make sure he gets it right so he doesn't get penalized for his reporting. And financial institutions have the almost the same obligation. They don't want to get fined either.
Yes, and I think a lot of them probably looked at it when it first came out and thought, well, that's just a bit too difficult, so we won't deal with Americans. So there's a lot of issues from I heard Americans finding appropriate banks or appropriate insurance companies or platforms to be able to do their investments. And did you find that at all?
Oh, it's certainly true. Yes, some banks didn't really want Americans' accounts. In some cases, American institutions based in the U.S. didn't want to deal with Americans abroad either, because there's an obligation for the U.S. institutions to understand the laws of the overseas country where the Americans are. And that can be hard, you know, with all the, how many jurisdictions are there? 180 to 220. It's quite confusing.
Yes, it's almost as if the authorities are doing something for their own citizens that most countries don't do, which is unfortunate in this instance, not very positive. So look, and it's not just people who are normally known to be American. So this has got a lot of people called accidental Americans who could have been born in the States, or parents from there, or business partners, or even married to American. The net is quite wide, I believe, isn't it? It covers a lot of people accidentally. I think that's why they're called accidental Americans.
Accidentally, for sure. And some people, you know, may marry abroad and think they are cut off from U.S. tax obligations, but they might get a rude awakening one day. Not for me to say. I don't have any direct experience of that.
Yes. So as a person who's been there, done it, lived the change and lived the world of being a US expat, what would you say the main actions other American expats who are listening to this video should be considering and doing?
Well, definitely, when it comes to your tax obligations, it's very important that you report all your income, that you report even income that's not readily transparent, because if you're audited, all your bank accounts will be reviewed, and any deposit will have to be explained.
Mm.
Outgoings too. So it's very important that you stay on top of all of your accounts and report all your income every year. The difficulty for those of us who may be a bit older and have investments as our source of income is that we have quarterly payment obligations, and that can be very hard to determine. I've, once or twice, I've maybe underreported during a quarter and had a little bit of an interest penalty, a little bit of a filing penalty, nothing too major. But there are so many things that you also have to consider. If you have a gain in your overseas pension, that gain has to be reported annually. Even, of course, you've not received the money, it's held for your retirement, but you have to report it, pay the tax on it. And it's taxed at the rate of ordinary income, not as you might find with an investment as a long-term capital gain, which has a lower rate. So there's many steps to getting it right. And the important ones, I would say, is, get your attitude right, make sure that when you invest, you're on a platform where the reporting can be done correctly and swiftly and in time for you to report when you have to do so.
Yes, unfortunately, today I think a lot of these institutions are catching up. They are getting bigger compliance departments. They're investing in it, and this reporting you're mentioning, in some in particular ones, so you're getting automatic reporting for Americans, which is a new wave coming through, which is very good news, I believe. So, look, specifically moving on to investments themselves, so going from the reporting down to the actual investments, do you have any tips for any of these expats Americans, what they should be looking at or doing or cautious of in terms of the actual investments?
Well, start with your income. If you have a salary, be sure you're setting some aside for investments. It may take a few years to build up a little bit if you're new to the expat world, but then you have something on which to base your investments, whether you want to buy a property, buy stocks, bonds, ETFs, gold, silver, you name it. So save some income, 10 to 25 to 30% if you can. That's very, very important. I've sometimes looked at investments as enforced savings, so I may be one of the few people with my Hong Kong MPF where I donated a large part of my salary to the voluntary portion of MPF. And that came in handy when I needed to pay off my mortgage. As a matter of fact, I could withdraw it.
Yes. Yes, very good indeed. Yes, and that falls straight back into our enough concept. It is really cash flow management. And I remember reading a book that Warren Buffett wrote where he was insisting that his children should be considering putting 30% actually of their income away to ensure their future wealth. So it's a very, very interesting, and I totally agree with that concept of managing a cash flow to ensure your future is okay. So spend some of it now and save some of it for your future and spend it in the future. So that's an excellent concept. And I suppose it really links on to where I was coming from in the compliance world of what to actually invest in, because expats, you can literally invest in anything if you choose to. And in the compliance world of the American scenario, got something called a PIFIC and something called a QEF, a QEF. And I think PIFIC stands for the Passive Foreign Investment Company, which is basically anything that exists out there as an investment unless it states otherwise, and it becomes a QEF, which is a qualifying elected fund or something similar along those lines for other securities. So knowing the difference between the two is essential in terms of your taxes, because the assumed taxes on PIFICs are quite draconian, I believe. So have you had some insights along these lines?
Oh, yes, indeed. The important thing is when you have an investment, in the very first year that you make it, you should talk with your tax advisor for them to examine what it is and find out if it is one or the other. Because the tax rates on the PIFICs are a bit more stringent, and you can end up losing a bit of your investment when you cash out, when you take the gains home. So it's very important that you get it right at the very start. I had always thought that it was aimed at, say, overseas unit trusts, and I think that's how the regulation started out. But now, as you say, it's really aimed at any kind of investment. A private company that you may take a stake in, you will need to show your tax advisor the annual P&L, and they look very carefully at the cash position to see if it's a passive sort of investment or whether it's an actual business that's operating as a business. And so, yes, I have experience with that. And once or twice I've had a small penalty to pay because I didn't realize exactly what was required.
Wow. And do you think these enforcement of these rules are going to just get even tougher now? We've got all these furlough and all the expenditure they've been spending out for the COVID scenarios. Do you think they're just going to get worse, or?
Yes, I do. That would probably be the easier solution for the government to raise its revenue than to pass a tax increase through Congress, where politically they're divided and one party supports lower taxes and the other party thinks that higher taxes make life better. And perhaps it makes it easier for the government to pay for programs, yes. So yeah, I think the effort will be put into getting higher rates of compliance with your tax obligations. In the headlines, they've talked about billions and billions more that are owed and never collected, and that's probably the case given the nature of 4 or 5 million American taxpayers abroad, and some of them not actually in compliance.
Yes, I concur totally. I was reading something about the Americans are going for a minimum tax on every single company in the world now, minimum corporation tax. So I think this world of tax for individuals, corporates, from an American point of view, and indeed any other country, is only going to get worse. So it just emphasizes the reporting, making sure you've got compliance structures in place, ever more so.
Yeah, and the difficulty for us as individuals is, we are paying an income tax. Corporations are paying a profits tax. So, if we have an income, you're not able to deduct all of your expenses and determine your profit. You have to pay it on all your income.
Of course.
So they really suck it to us.
Yes, they do. Right. I think the next big one then, this naturally leads into, is your onshore and offshore investments. Now, every expat normally has some exposure onshore, whether it's a property or in the US scenario, it could be a 401k or an IRA or even insurances. And then you have all of your offshore scenarios, like you mentioned, an MPF earlier, and all your investment platforms and so forth. So what insights can you give any expat, or US expat in particular, although it could apply to almost anyone, this concept, any insights on managing both of those without incurring the wrath of the taxman or etc.?
Well, definitely. For your overseas financial investments, make sure they're on a platform where the reporting is clear and accurate and provided to you, and I believe it also has to be provided to the IRS. So you can't dummy up your reporting if it's already going in through another channel. The IRS will figure that out eventually. So yeah, be accurate, be honest, and if you spot a mistake with the reporting, and I have done so, get in touch. Don't let it slide. I had to call the custodian once and say, look, I think you've underestimated what my income was. And they said, wow, good thing you mentioned that, because otherwise, it could be even worse for you. Having to pay the tax now is the easy solution. Getting a penalty later is the harsher solution, So take a look at those things. Now, what I would say for Americans in general is just be aware of the consequences of foreign exchange rates on your returns. I had an experience with an investment in wine stored in bond in London. It was a goodly amount of Bordeaux. It was there as an investment, not to drink. And unfortunately, when the Brexit vote took place in June a few years ago, sterling cratered. And when I had to sell the investment, I'm just barely broke even. instead of having an actual good gain on the price of the bottles in sterling terms. So
yes,
be aware of exchange rates. I look at exchange rates as a bit volatile. They're not as volatile lately as cryptocurrency has been, but you've got to be aware of all of it.
yes. I think you just mentioned an asset class there that's very volatile and exciting. It's an emerging asset class. But going back to the currencies, I agree with you. One thing we try and do is always match what we call base currency with the client. So where are you going to spend your money ultimately? So if you're going to spend your money in the US, we try and match that with the US to remove the currency risk. There's just too many factors. There's politics, there's economies, there's all sorts of things that affects the price of the FX rates. So we're trying to remove that risk as much as possible so as to make it a life easier.
Yeah, that's good advice. You know, you want to be able to sleep easy at night. That's why I say stay compliant, to sleep easy, manage your investment risk, including with foreign exchange. You'll sleep more easily.
Yes, yes, I totally agreed. Sleep is more important than most people believe. Although as we get older, I think we find that one out.
Oh, yes, indeed.
So yeah, so going back to the onshore offshore, we I believe in what we call joined up advice. I think we call that in the offshore markets, where BMP will focus very much on your offshore status, your offshore investments, and work with tax advisors for the taxes and so forth. But you may want to consider working with an onshore or a US licensed advisor for your onshore investments or insurance policies and taxes. So again, we can make those introductions so that seamless professional passover of information, so you don't have to repeat yourself over and over again by going from one institution to another. We can make that seamless and nice experience for you and all our clients. Okay, so in terms of all of this, then, is there anything else you'd like to add in terms of navigating the markets as an American?
Well, I would just say, follow your heart. Invest in what you believe in. Now, as I say, there have been some American sanctions on Chinese companies, right? And
Yes.
you're not supposed to invest in that. So I don't have any experience with that, but institutionally that will be applied. But in terms of your own interests, follow them for sure. If you like the restaurant trade, invest in that. If you think the airline business is going to come roaring back in 2 or 3 years, then buy it while it's low, So there's just use common everyday logic to set yourself a course. And then with the help of your advisor, financial advisor, see if you can stick to that course. Don't chop and change too often, because investments play out over the longer term. My longest held stock investment is now 21 years old, and I'm just delighted with it. So that's one example. It can work that way.
Well, it's almost as long as I've been in Hong Kong then. So that's okay.
Well, I should have invested in Howard Clark Burton when you got here.
I was a much higher risk in those days, I can tell you.
Yes.
Okay, so I think in summary, I think we've highlighted some key points here. I think the number one is we come from making sure in terms of offshore investments, it is compliant. It's the PIFIX and QEF world, and making sure you do your reporting on time. It was correct, Steve, is the liability rests with you as an individual. So even if someone else makes mistakes, you are the one carrying the can. So we got the exchange rate issue. So again, we mentioned a concept of matching base currencies. So to Americans, that's US dollar, and unfortunately for Americans, it is the world currency. So you can almost invest almost anything in the US dollars within reason, of course. And then taxes paid annually, especially in terms of capital gains within the platforms, like pension schemes you mentioned earlier on. We had to get those paid annually, which is quite painful because you're not receiving the money at that stage, but they still need to be paid. And then, of course, I think an interesting one here is I looked up just before here how many pages there are in the various tax codes. Now, would you believe it? Hong Kong has about 270 pages in its tax code. Very nice, very simple. The UK, which is probably one of the longest tax authorities serving in the world, and it's called the HMRC, Her Majesty's Revenue, that has got 20,000 pages broadly today. The American one, correct me if I'm wrong, Steve, you might have a better insight here, but I read it was something like 80,000 pages long. That's almost unbelievable. Is that correct, do you think?
Yes, it is correct. And it seems that the government has outsourced the tax preparation duties to various accounting firms, and they have to know it all if they're going to do their job correctly. So the burden is on them. The taxpayer probably can't know it all, but that's why you have to depend on good advice. Yeah, it's huge. It's huge. Perhaps it means it's too complex. There are perhaps too many forms of credit, too many forms of differential tax rates. And of course, sometimes you have to pay state tax as well. If you have an investment that was in a state, you sell a property, you have a trust, you've got to pay to the state as well. So it gets quite complicated.
That's fairly unbelievable, because I preach to my British clients that the British code is only 20,000 pages, is 12 times as long as the Bible. So can you imagine how long the American one is? We're going to have to think of a different book there. All right. Well,
how many words did Shakespeare write? I'm not quite sure.
That's a bit nice one. Yeah, I'd have to look that one up. That was a good reference point. So I think, look, thank you for your time, Steve. It's been an amazing few minutes in terms of getting an insight for the Americans in the offshore world and what's going on in Hong Kong. And of course, if anybody's got any questions, what you can follow up by contacting us here at BMP. And I'll give you the contact details at the bottom of the screen in a moment. And we have American solutions for the offshore element of your investments. And on that note, I'd like to say thank you, Steve. It's been an absolute pleasure of talking to a gentleman like yourself.
Thank you, Howard. It's been a pleasure talking to you, and hope to see you soon.
Thank you for watching our video. If you'd like some more information, please send us an email on info@bmpwealth.com. Of course, there's a lot more information on our website, which is www.bmpwealth.com. Now, if you liked what you saw, please click like at the bottom, and we'll send you more updates as they come out in the future. Thank you very much.